Now, someone's decided, yeah, I want to invest in private real estate. There are multiple ways you can do this. I mean, you can invest directly and go buy the properties yourself. You can use a fund, where you're buying, into multiple properties, 10 properties, a dozen properties, 15 properties. And you can buy into a syndication. Now, there's a little bit of a blend between those two.
Yeah.
As you mentioned lately, you guys have been putting 2 or 3 properties into one syndication. But what do you see as the big benefit of choosing an individual syndication?
It's one of those things that's kind of evolved over time, at least for us. We had a fund model earlier on in my career, and we kind of started to lean back towards syndications just because of the specialty that it allowed us to focus on. So in New York, the ability to move quick is kind of key. You've got a lot of competition from a lot of different parties, depending on what class you're in. We're mid to small cap deals, so we found in New York the most value we can get on a dollar by dollar basis is in this tranche that we work in. So in order to do that, we found that we can do syndications quickly and efficiently. We can be in and out fast. 30 months is kind of our average investment term. That's our goal. We want to, from the day an investor cuts a check and receive it to the day they receive it, their profits back, it's 30 months. That's the objective. With funds, it takes a little bit longer. They're more 5-year at least, just because they need time to kind of put that equity to work, or they can be 10 years. So it's a much longer horizon. The fee structure is kind of different. That's one of the things you always have to kind of look into. With us, we don't charge investors like on the capital. We don't charge for the investor on the money, or a point a year or 1% on them. We charge a development fee on the project, which is paid through the exit of the project, and we charge. We get a disposition fee at the exit. So there's no fee that we pay that investors pay us for the money that's invested. We don't charge like a closing fee or acquisition fee. We're kind of more back-ended and during the process type payments. And I think that's a little bit more unique, where you can get a little bit more of just a different perspective, a different way of doing it. I think my background being architectural, for whatever reason, using the other half of my brain, I found this to be more enjoyable for investors and more personalized. I like the kind of personalized part of it, and that, and being a boutique firm, I think you have more of that benefit where you can be more personalized. You can have, with syndications, you can talk to someone. If someone reads something online, the market does something funny, debt ceiling issues, all these kind of things, there's a phone call that someone can make, and they can talk to me or 3 other people in the office and address it. If they want to see a project, they can do that. With a fund, you become one of thousands, and you fall into the pool like Vanguard. So I think that's the other part of it, being a little bit more personalized basis, where we're with all this information online, where people want information constantly, just because it's the nature of our news cycle now. I think syndications really kind of work to that a little bit better.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.